Welcome to The Explainer. We are diving deep into Tesla's latest earnings report. And let me tell you, those record-breaking sales numbers, they only tell half the story.
All right, before we jump in, just the usual quick heads up. This is purely for informational purposes, okay? It is definitely not financial advice.
Okay, so let's get right to it. At first glance, Tesla's new quarterly report, it looks absolutely fantastic. I mean, the growth is just incredible. But as we're about to see, there is so much more going on just beneath the surface.
So first up, let's look at those big, flashy numbers. You know, the ones that were all over the news, painting this picture of a company just firing on all cylinders.
Okay, get this. Tesla delivered nearly 500,000 cars. We're talking in just one quarter. That's a massive logistical feat, and it's a solid 7% jump from this time last year.
And all those cars rolling off the line, well, that turned into a record-breaking $28 billion in revenue. That's a 12% increase. And you know, it's not just cars anymore. We're starting to see some really serious growth in other parts of the business, but we'll get to that in a bit.
All right, this next number is super important for understanding the company's real financial health. $4 billion in free cash flow. So what is that? Think of it as the actual cash they have left over after paying all the bills and funding all those huge expansion projects. And that number, it's up a whopping 46% from last year. Just huge.
So record deliveries, record revenue, massive cash flow. You'd think Wall Street would be throwing a party, right? Well, not so fast. The story gets a whole lot more complicated once you start digging past those headlines.
Okay, now for the other side of the coin, profitability. And this right here is where the whole narrative starts to shift, and we begin to see a very, very different picture.
So to really get what's going on here, we have to talk about a metric called operating margin. You can think of it as a simple health check on a company's core profitability. For every single dollar Tesla brings in from sales, how many cents are actually left as profit? That's the key question.
Okay, just look at this comparison. A year ago, the operating margin was almost 11%. This quarter, it's been slashed nearly in half, down to 5.8%. And it's the exact same story with their earnings per share. That's down 37%. So, put simply, yeah, they're selling way more cars, but they're making a lot less profit on every single one.
So what's behind this profit squeeze? Well, it boils down to a few key things. First, Tesla is pouring a ton of money into R&D for projects like AI. At the same time, the average cost to build each vehicle has actually gone up. And on top of that, they're bringing in less of that really high-margin cash from things like software and regulatory credits. But hey, it wasn't all about squeezed profits this quarter. There's another part of Tesla's business that is absolutely booming. And honestly, it's a part of the story that a lot of people tend to miss.
Okay, now this is a part of the business that's just exploding. Check out these energy storage numbers. Deployments shot up by 81% compared to last year. This is not a side hustle for Tesla anymore, not by a long shot. This division just brought in a record $1.1 billion in gross profit.
So how do we tie all of this together? We've got record sales but shrinking profits. We've got a booming energy business. What does it all mean? Well, it all points to one thing. That heavy spending we're seeing, it's not just a cost. It's a calculated investment in a very, very specific vision for the future. And Tesla isn't being shy about it either. They lay out their game plan pretty clearly right in their outlook statement. They said, and I'm quoting here, "Over time, we expect our hardware-related profits to be accompanied by an acceleration of AI, software, and fleet-based profits." You know, that one sentence, that's the key. That's the Rosetta Stone for understanding their entire strategy right now.
So here's how that strategy really breaks down. It's kind of like a three-step plan. Step 1, scale the hardware. That means sell as many cars and battery packs as you possibly can, right now all over the world. Step 2, take the money from that and invest it heavily into AI, robotics, and autonomy. And then, step 3, that's the end game. That's where you unlock a whole new stream of profits from AI-powered services like, you guessed it, robotaxis.
And that right there brings us to the fundamental question of this whole quarter. Tesla is very clearly sacrificing today's profits for a massive, all-in bet on a future run by AI and robots. So the billion-dollar question, really the trillion-dollar question, is simple. Is that bet going to pay off?